What is going on, guys? Welcome back. We are back for this week's Sunday Scan. Welcome to the month of September, guys. I could not be more excited to get this month started, but I wanted to welcome everybody back. Hopefully you guys have enjoyed a nice, long Labor Day weekend, guys. If you are in the States, happy Labor Day. Hopefully you enjoyed, like I said, the 3-day weekend, guys. Wanted to welcome everybody back to the Sunday Scan. If you are joining us for the first time, welcome. I know there is a few hundred new people in the Patreon and the Discord for the month of September, guys, that have joined this past week. So welcome. I know it's a holiday weekend, so everybody's probably out enjoying the weather. I know it's beautiful across the country. It's definitely beautiful where I'm at today, and I know it's been it's a big holiday week for travel. So I know everybody's probably just kind of getting settled into everything, and we're gonna really kind of get started going into this week for the month of September. So I wanted to welcome everybody. If you're new, welcome to the Sunday Scan, guys. This is the part of the week where I go over my watch list, focus setups, and just kind of my general thoughts going into the market for the week ahead. This is one of the key and most important parts of my week, guys. Sitting down every Sunday, or in this case, Monday night, and preparing for the week ahead, guys, spending just a couple hours or even just 90 minutes going over your setups and the things that you really want to focus and hone in on the Sunday, or in this case, Monday night, can make all the difference, guys. So this is one of the critical aspects of my week that has led me to getting to this point in trading. So I really wanted to emphasize how important this scan is for me every week, and hopefully it brings you guys value and helps you throughout your process. So this is one of the best parts of the service, in my opinion. So if you're new, make sure you take advantage. Every single week, there's a full game plan that I put out. So wanted to welcome everybody if you are just joining us for the first time. Now, a couple housekeeping items. Like I said, welcome to the month of September, guys. July and August were absolutely insane, especially for the first 2 weeks of July, and then, or excuse me, for the 2 weeks of August, guys, and all of July. And then we really saw the tape kind of flip, right? We saw that relief rally kind of end, or, in this case, we'll call it kind of the run that we had in Apple and a lot of the other names, guys. And that really brought some increased downside volatility back to the market. So the game plan has had to change a little bit alongside it, right? You'll notice that my Sunday scans right now are probably a little bit shorter. On average, I'm looking at 3 to 4 setups every single Sunday that I want to hone in on. And, like I said, guys, it's really just a different market right now than it was in July and August, right? We saw a really hot market for about 6 weeks. And I say hot, but I'm talking about a QT environment type of hot, right? We're not talking about 2020 or 2021. We're talking about a really beautiful relief rally that we were able to take advantage of on a lot of names. And now we've got a lot of opportunities in the other direction on the downside, right? So remember, guys, you might hear me talk about like longer term things I'm looking at. That is not my day-to-day focus, right? I'm still going to take advantage of these beautiful downside opportunities that we have. These are just as A+ as the upside opportunities that we played, and it's just an adjustment. So if you're a little bit new to playing the downside, taking advantage of the short side of the market, make sure you check out my How to Play the Downside video. That's going to be in the Discord in the educational video section, so make sure you check that out. First thing is first, I want to take care of the housekeeping items. So first off, we are going to be going over our book winners. So if you're not familiar, every Sunday on this scan, if you just leave a comment on the YouTube video itself with one thing you took away that helped you prepare for the week ahead, or one thing that helped you in your process, just one thing, one main takeaway from the video, guys. Every week, I'm going to pick one person that comments to win a free book. These are going to be books that helped me throughout my trading career, and then I'm going to ship you a book out at the start of every month. So I'm going to go ahead and announce our 3 winners from last month. Jacob Stenberg, Daniel Williams, and Simon C. Those were the 3 winners from last month's Sunday scans. So go ahead and send your shipping address to LD Trades. If you're not familiar with him, he's in the Discord as well. He's our Discord admin, and he's kind of the Patreon admin as well, guys. He's a really integral part of the Discord and the community, and he takes care of all the back end stuff. So go ahead and send him your shipping address. He will go ahead and ship you out a book, or I will ship you out a book this week. One of these 3 that helped me out in my trading career. Thinking Fast and Slow is one of the books I'm giving away this month. That's one of my all-time favorites. So make sure you guys go ahead and send him your shipping address. Congratulations. Again, we start a new month, so new book giveaway winners. Just leave a comment on this video or next week's or the week after, And then on the first scan of October, I will announce book winners for the month of September. So welcome. Congrats on the book winners, guys. You guys should really enjoy these books. So first housekeeping item out of the way. Second housekeeping item, a lot of people have been asking me about the A+ setup sign. And we haven't done merch in a while, so we are going to be coming out with a Free Money Friday hoodie and the A+ setup sign. The hoodie should be available this Tuesday, guys. It'll be super limited quantity and sizing, but I'm really excited about the design we did for those. And then the A+ setup sign, taking a little bit longer to get in production, but we'll have those out soon. So that is it in terms of housekeeping items. Congrats to the book winners, guys. Thank you guys for leaving your feedback. Always helps me make a better Sunday scan that hopefully is helping you out a little bit more. So, all right, guys. So I'm going to kind of go ahead and preface the week that we have ahead, guys. Remember, we are coming off of a holiday week. I normally start the scan with crypto, but crypto has been in a very much a sideways consolidation phase right now. If you haven't noticed, Bitcoin has been range bound within about a $700 range. And so we do not have a ton of volatility there. So I'm not going to spend that first part of the scan covering crypto. I'll cover it at the end and my thoughts. But I do want to kind of go ahead and start with the S&P 500 and kind of the broader overall market. Also, I want to mention, like I said, guys, this is a different market than we had 7 weeks ago throughout July and early part of August. And I've really tried to emphasize that because if you are still sizing the same, if you're still trying to trade this market the way that you traded that market, because I know a lot of people had a ton of success in that market, you're going to give back gains, right? Nobody is perfect in that sense. Even I gave some of August back at the last week, right, guys? I could have even done better and executed even more. So, but like I said, guys, that's a process. So make sure that you are approaching the market the way it needs to be approached. If you approach every single week the same, that is a recipe for disaster, right? So we really want to make sure that you have your focus honed in on. Understand that the volume and liquidity is low right now, guys. We are not in a high volume, high liquidity environment. So we need to approach things in that sense, right? We need to approach it from a more defensive, kind of take what the market gives you approach. And that's really, really important right now, guys. So make sure your approach is on target every single week. In my opinion, that is one of the biggest things for me. So like I said, we are coming off of a holiday weekend, guys. We are currently looking at the S&P 500. I'm expecting a little bit of a slower start to the week. We're coming off of what is basically, at least on Wall Street, considered kind of the end of summer. This is kind of the end of summer blowout week. A lot of people are away for the month of August, July, a lot of times, especially on the weekends, guys. A lot of fund managers are away. And really September, the latter half of September is when we tend to see the volume kind of come back. And with that, we have that seasonal weakness, right? So we are coming into a very important time, guys, especially as we have midterms now just 2 months away, right? And the run up for those midterms is really going to start in October. So until we get to that end of September, early October timeframe, that's when I really think things will heat up in terms of momentum, in terms of range, in terms of themes. But until then, the scan is going to be more concentrated on kind of those daily trader names. So the week ahead, I'm, like I said, expecting a little bit of a slower start Tuesday into Wednesday. We have a ton of Fed speakers on Wednesday, guys. I don't want to mispronounce the number, but we have 6 Fed speakers scheduled for Wednesday, guys. Barkin at 9, Mester at 10, Brainerd at 12:35. Book at 2 and Barr at 2 as well. So that's going to be a lot of Fed speak on Wednesday. So, don't try to over anticipate, a really smooth trend in the market, especially because on Thursday we have Powell at 9 a.m. Eastern. So that's going to be a pretty big catalyst, guys. Again, I think we're going to experience a market where we see that late week direction kind of come into play. So Tuesday and Wednesday are going to be days where I am not looking to force things, right? You have to find those A+ opportunities in a market that might not have as much trend as you would like or as many opportunities on the A+ side as you would like. So it's good to size down early in the week, especially when we have Powell sitting at the end of the week on Thursday. And remember that the last time Powell spoke, we had a massive reaction to the market. So people and investors and traders are going to be a little bit more cautious going into Powell, right? We've heard the mantra higher for longer. And so there needs to be a more cautious approach, especially long side at on names headed into this week. So like I said, guys, a lot of Fed speak lined up. Tuesday, we do not have any Fed speakers scheduled, so we may have a little bit of a smoother trend day. However, remember, we're coming off that holiday week, so I'm not expecting it to be crazy by any means. However, Thursday into Friday, believe it or not, we'll be finishing our, technically our first true full week of September, but we'll be getting into almost the middle of the month, and it's crazy, guys, how fast time goes, right? But like I said, coming in on the S&P 500, the really big thing that I want to watch this week is that weekly candle from last week, guys, on the S&P here. This is going to be one of the first weeks where the S&P is at the top of my focus list in terms of daily traders. I think the S&P will offer a nice opportunity, guys, in either direction this week. In all reality, if we bounce off of this 390 level and can hold this 390 level, which we were currently holding in futures last time I checked, because the futures market is open today. So we are holding that 390 level for now, and that is a really, really big bias level. From 390 into this 389.87 level, guys, that's really a crucial support to hold. Otherwise, if we break that level to the downside, I do think we get an A-plus opportunity with a short side move down to the 380 level. And, I really think that, the price action has moved pretty smoothly through this area. We do have a lot of support in that range, as you can see illustrated by these larger wicks down on these weekly candles. However, remember, we're looking at the weekly time frame right now. So still, price action moves pretty smoothly through those levels, right? And we've had a pretty steady downtrend since we rejected that kind of bigger downtrend line on the S&P 500, right? You can see we've touched it 3 times now, and we really have seen a pretty fierce rejection with accelerating sell volume on the S&P 500, right? A lot of that is due to the Apple weakness we've seen. Remember, so goes Apple, as goes the market, so we really need to pay attention to that. But like I said, guys, if we see the S&P 500 break that downside level at 390, I'll really be looking for a move, like I said, pretty smoothly down to this 380 level, right? 379.25 is the level that I have marked out. 385 will kind of be that first area that we likely see a decent amount of support come in. I do want to mention, why is this level so important? Well, let's look at the daily time frame here, guys, and you can see that on the S&P, right, the first 2 times that we attempted that relief rally, right, especially, I think this may be a little bit better to illustrate on the Qs, but if you look, we saw 2 really big rejections at 390, right? The first one being in the end of June, we saw a big rejection at that 390 to 392 level. And then again, guys, right, in early July, right before we saw that kind of broader term relief rally take place, we saw a lot of resistance at this 390 level on the S&P 500 the last time we tested it on the upside before we broke out, which was in, early July, the first or second week of July, July 8th, and then the kind of second week of July, right, July 11th, July 12th, we saw that downside pressure come in, right? So really, like I said, guys, this is basically, as of right now, this is still old resistance is acting as new support for the time being. And that's why this level is so important, right? Because the past 2 times we tested it, before we broke out, we rejected, right? So this is our breakout point over 390. And then you can see after we broke out on that last relief rally in mid-July, we came back, retested, and that was that launch pad for a move to 430. So remember, guys, this is going to be a really, really important level. I think the path of least resistance right now is likely to the downside. So if we break that 390 level, I do think there's an A-plus opportunity on the short side for the S&P down to that 380 level. I will mention that if we see, buyers step in at 390 again early this week, I do think there's a nice upside trade, probably to the 400 or 405 level, which is where we've seen that massive upside resistance, right? If you reference before the big kind of move down on the S&P in June, right? And early June, we saw that a lot of support at 404, 405. So that's kind of the big upside level that I'm paying attention to. A little bit better of an illustration on why I'm saying that level is so crucial. If you look at the Qs, right, we kind of also had that really strong area of resistance in this 293 to 294 area. We saw a lot of resistance up there coming off these June lows. So this is going to be a very important level to hold. If the Qs break below this 293 level, right, and I really think on a daily close under 292, I think we're going to see that kind of larger scale fade down to the 280s, right? So really paying attention, guys. That hammer candle, right? And we talk about this a lot, but that hammer candle had a low of 292.95, and then we failed to see any bullish follow through off that hammer candle on Thursday, right? We saw selling pressure accelerate. So like I said, guys, coming into this week, have to be ready for that larger scale downside move. Now, let's talk about my first main focus setup outside of the S&P 500. That's going to be Apple, right? We've talked about this name a lot, but like I said, I mentioned last week that 154.80 level was going to be crucial for me. We saw a low of 154.67 on that hammer candle last Thursday. This is going to be my bias level for the downside coming into this week. Apple is primarily going to be a downside vehicle for me right now. I like to trade the downside on names with relative weakness, and I like to trade the upside on names with relative strength. Well, right now, Apple is kind of a little bit bloated, right? It's a name that still hasn't had its valuation correct much. We almost touched all-time highs less than 2 weeks ago. So remember, guys, on the downside, this is going to be one of my main downside vehicles, right? A break under that 154.75 level, or excuse me, 154.67 level from last week's low. That could be a pretty big level for me to trigger that downside opportunity. I'd be looking towards the 150 puts, likely for the September 16th expiration. Remember, guys, we are coming into a short week. This is a week where I'm probably honestly going to not be trading weeklies nearly as much as I normally do. Weeklies offer a lot of opportunity for advanced traders, but coming into this week, we have a short week, a little bit of a slower market, more than likely with how many Fed speakers we have and a lot of people coming back from vacation. So again, I'm probably going to be looking at the September 16th expiration for any high confidence trades I'm going to take. I just find this to be a lower stress and in a slower market, a better strategy to use that expiration with a little bit more time on it. So that's one big tip I can give, guys. That's always definitely helped me a lot in terms of reducing my risk profile. So I'm really going to be watching that 154.60 level, which was our low last week on Apple. That's kind of going to be my bias level, guys. And if we see that level crack at that 154.50 mark, sometimes if we see that, like, there's a 17-cent discrepancy between my level and the level that we touched, I'll use that 154.50 level, kind of that roundish number, as kind of my bias level to the downside. If we break down, I think Apple likely finds the 150 level pretty quickly, guys. That was our retest level when the S&P 500 was retesting 390 in late July, which gives you an idea of how fast we've moved, really. But this 150.71 level would be my first downside target, and I really think we could fade towards that 147 key level, which is a pretty big pullback if you kind of realize, towards the end of August, we were trading 170. So this is, just as quickly as we saw that relief rally upside. Remember, guys, this thing printed 7 straight weekly green candles, and it rejected hard off that trend line. You can tell, what does this look very similar to? This looks very similar to the S&P 500, and that's because Apple has that 7.3% weighting in the S&P. So as goes Apple, as goes the market, and that's why for right now, Apple is kind of going to be my main downside vehicle and watch alongside the overall market. Now, guys, so like I said, that's my downside focus on Apple. My second top focus name is going to be Tesla. This is the type of market, guys, where I like to latch on to a stock that I'm familiar with and a stock that I can trade very well and that I'm experienced with. And for me, that's Tesla. Kind of like this was the stock I kind of started trading options on. I got really comfortable with it, and there's really nice times where it trades really well. And I think that's going to be one of those times right now, guys, and that's kind of why I've been trading it so much the past week. I want to point out the weekly chart here, guys. As far as downside levels go, I'm going to be, again, using last week's low as my confirmation point. So if we were to break, as you can see last week, we had a low of 266.15. If we were to break that 266 level on the downside on higher volume, this would be A-plus short opportunity for me, guys, down to that 255, 251 area. So this is going to be absolutely at the top of my focus list for this week, guys. If we were to break that 266.15 mark, I'll be looking to take this short side via the 260 put weekly, more than likely. Or if I look towards next week, probably the September 16 250 puts are going to be one of my main watches. However, you saw me on the written watch list mention, if we see demand come in at 267, this can also be a fantastic upside opportunity for a move back to that 290 area. So again, with energy names hot, one of the caveats with Tesla is that it's been trading alongside a lot of these energy names because of the exposure it has in the electric vehicles. It has an entire solar department within the company. So they definitely kind of get grouped with the energy names a decent bit. Remember that big Inflation Reduction Act got passed, which had a lot of incentives for EV credits, which is bullish for Tesla. So we have been seeing relative strength on some days. Again, honestly, it's been weird, but like when oil is trending up, Tesla will kind of follow. You're seeing that in solar as well. So if we see a lot of demand and buyers step in at 267, I think this can provide at least a 12-point upside opportunity into the 282 level. And like I said, guys, this is one of my top strategies or approaches when it comes to the market in slower markets like this, is to find that one stock that like the back of your hand, right? Having that knowledge, trading is all about edge. If you can have an edge, even if it's just knowing a single name really, really well, knowing how it respects levels on certain time frames, and understanding the tape itself and understanding how to read that level 2 on that particular stock, you put yourself at a huge advantage already because you already have a massive edge coming into that trade. So that is Tesla for me right now, guys, especially when the market is like this. I do want to point out on the weekly also, if you go back to 2021, that 251 level was a really, really important level for Tesla, right? We've got a pretty bearish pattern here on the larger time frames, but I'm going to go ahead and clear my levels for you guys and really illustrate, look how important back in 2021 this 251 level was, right? As soon as we broke down under 251, guys, we really saw kind of that bigger move down, right? All the way down to the 177. This was obviously pre-split, but that 180 level, right, kind of acted as support. But that's a 70-point move to the downside on a name. So there's a ton of opportunity, and that 70-point move came within just 2 weeks, right? So that's why I really think right now that 251 to 254 level is going to be absolutely crucial for Tesla to hold. And again, we saw that as like a major level even more recently, right? As soon as Tesla broke above this 255 zone, right, on the weekly, we saw a massive move to the upside up to 320s. And right now, right, and that 200 level kind of acted as support. So if we break back under 255 and under 251, which is the key level on the weekly, I really think we're going to see kind of that progressive fade down to the 200 level, which is a big 50-point downside opportunity. So remember, guys, those are going to be kind of my key levels coming into this week. On the shorter time frames, and quickly I want to mention, using past price action for an indication of how future price action is going to move is one of my favorite all-time approaches, guys. Past price action can be so influential on how a stock behaves when it breaks those levels again, especially when it has a similar setup and environment. And that's why you see me going back to 2021 to look at, how did Tesla behave the last time it broke 250 to the downside? Well, we saw a 70-point fade off that level, right? In just 2 weeks, right? This is 2 weekly candles. We saw a 70-point fade. So if we see Tesla break the 250 level now, I think you definitely see that kind of habitual look back at, okay, what was the last kind of price action we saw when we broke this key level to the downside, right? And just like we saw a very strong move up off that 250 level or 255 zone on Tesla, a couple months ago, I think we can see an equally strong fade to the downside if we break that level. So just keep that in mind. That'll really help in terms of kind of approaching with direction, and understanding those larger time frames is always super, super important. So like I said, guys, on the shorter time frame daily chart, again, I'm going to be using last week's low 265.68 as kind of my focus area. 266.15 is my focus area to take this short side. I think we would get a move down to this 255, 260 level, but remember, we're probably going to see a decent amount of buyers in here, so this might be a nice, quick fade opportunity, but it's nothing I'm going to look to stay in until we get that larger time frame close, right? Any type of multi-day trade or anything like that. This would be all, very quick, 15-minute, 20-minute type of trade, right? 2-3 candles to the downside. We get that 10-point fade, hopefully off that level. I think that would be a beautiful A+ setup. So Like I said, we could get that intraday 10-point move, but as far as holding overnight or anything like that, I'd want to see some larger time frame confirmation. One other name I am going to be focused on, energy names are going to be hot, guys, with the situation that we have in Europe right now. California is telling people not to charge their EVs. Energy is hot, right? We're seeing oil futures popped almost 3% today, guys. And uranium names have really come into focus as of late. And this daily and weekly volume we've been seeing on CCJ has been absolutely fantastic. If you guys remember last Sunday, I mentioned we saw that beautiful lower volume selling retest at the 2660 level on CCJ, and we saw a 9.3% move that following day. It was up 10% at one point off the open. This one likes to move off open, guys. But like I said, A+ setup range for me is anywhere between 2850 and 2805. A retest of those levels on Tuesday, guys, would really be a fantastic setup for me to the long side. I'd be looking to take it long between 2805 and 2854, and I'd be risking the 2790 level, right, as my risk, because that was our prior resistance. I want to see that, again, continue to act as support. So taking calls off of this 28 level, 28.5 level with 2790 as my risk. I'm risking 10 cents. Or, maybe 20 to 30 cents, depending on where I enter. This is one of the trades where I'll maybe take a starter, at like 28.50. I'll take like 30% of my position, and I'll be willing to add into that position, down to 28. And then, like I said, I would have a risk of 27.90 here. On the 15-minute time frame for this trade. So that's going to be something I'm definitely looking at. We may see this pop in pre-market, so we may have to be looking towards trading this more on a breakout setup over 29.97. That 30 psych level will be big and likely sees a move back up to 32 plus. So this is a bullish trend on the larger time frames. If you look at the weekly, guys, the weekly volume here is fantastic. We're seeing accelerating weekly volume and a really nice uptrend starting to form. I think that we see this take on new highs, new 52-week highs sooner rather than later on CCJ, especially with the momentum uranium names have had. So again, CCJ at the top of my watch list. Those are going to be my A+ setup levels that I mentioned below. Again, a break over 29.97, more from a breakout perspective, is going to be important. That would be my upside trigger if we have more of a breakout setup on our hands. And that's important to note, guys. As you saw me just mention on the daily, right? Looking for dips, I personally like taking trades off of support more than I like trading breakouts in a market like this. Especially upside breakouts in a bear market are not going to be as successful as they were during a raging bull market. Now, this is in a sector that is in a bullish trend. So like I said, for me, in this type of market, especially when it's slower, I like taking calls off of support levels and then selling at resistance. That's kind of my bread and butter. So in understanding what type of trader you are and how that needs to acclimate to this market is very, very important. If you are stuck trying to trade breakout setups in a downtrending overall market, you're going to have more problems than if you find a strategy that works, like buying calls off of support, selling at resistance, and then you have to understand, okay, how is my approach going to change into that type of trade, right? So make sure that you guys understand the approach that you're coming into every single day with and how that's going to work for you. And remember, it takes time. You sometimes need to, okay, this is working right now, this is not. That's how I like to approach the market. When it stops working, that's when you have to change things. While it's working, use it while it's working, right? Find that setup. All of July and the early part of August, we were playing coin off of those same support levels, and it would just rip right back up $10 into those resistance levels. And when that stopped working, the setup stopped working, right? I took a loss. I think I took 2 different losses on coin in the middle of August, and that was like my signal. Okay, hey, those setups aren't working anymore. It's time to switch your focus and bias in that sense, right? So understand your approach. Really, really important. Quickly want to mention Array, guys. I scaled into about 30 to 40% of my overall position. Really nice daily candle trap setup here, guys. We pulled back to that risk level that I had at that 1890 zone on Friday, and then we saw that kind of big push to the upside back over 20. 20 is this basing level, right? So that's kind of the area I'm looking to purchase calls, is between 1970 and 20 and scale into my swing position. This is for January, guys. So remember, I like buying these dips towards support. Array is in an early stage 2 breakout right now, guys. We traded the initial breakout, had a fantastic trade there. And since then, we've seen dips get soaked, right? So with energy hot, I do think solar is going to continue higher. Array had fantastic earnings growth, guys. I think they grew their gross profit 131% quarter over quarter. It may be year over year. I think it was year over year, actually. 131% year over year, guys. Gross margins increased around 2%. And like I said, guys, I really think this is a fantastic setup in terms of like a little bit of a longer term time frame. This is my kind of high confidence swing that I'm in right now. Again, I think that we really see that move towards 24, 25 in the coming weeks, especially with all this energy kind of momentum that we are seeing. So again, I'm still in full there. I'm adding to that position in my main. These are for January, guys. These calls expire next year. This is not the same as trading weekly contracts. If you're approaching this type of trade with a mindset of I'm going to get out in a day or two, it's not that type of trade for me. So for me, this is a month or two at least, right? And you know, remember last time it was 6 weeks, but we got 1,000% move in like, 5 weeks. So for me, I'm very, very happy with those returns. You only need, 6 or 7 of those a year, right? Maybe not 1,000%, but 6 or 7 doubles. That's a great year. And if you're sized in. So, and on those leaps or, longer term expirations, I can really kind of size into those. So, like I said, guys, definitely one of my favorite setups in the solar sector right now. I do think solar will continue to be hot. FSLR, really nice weekly breakout, and really fantastic volume, buy volume coming in on this solar name. So love that setup. And I also, like I said, I do want to talk about BTC quickly. Like I said, not a whole lot to talk about here, guys. I think we are in a consolidation phase. We have strong support at the 19.5 to 19.6 area on BTC right now, and we've got equally strong resistance at that 20.6K level. We're gonna need to see BTC get over 20.6K before we can even think about any type of larger scale move up. We have the ETH 2.0 merge coming in like 2 weeks, and then also Mt. Gox is going to be releasing, I think, 100,000 Bitcoins out of that total supply that they are releasing on that date as well. So definitely some catalysts coming up for crypto. Maybe there's a trade there soon in the future. Honorable mention on Coin. Like I said, guys, really nice weekly trend bounce here. I think this does have potential upside, but we're going to need to see Bitcoin and a lot of the other crypto names cooperate if we're going to see that actually validate. So again, guys, those are going to be kind of my main focus setups this week. Like I mentioned, the focus setup is narrower right now, right? So instead of, in a hot market, 7 to 8 names I'm mentioning on here, it's really 4 to 5 really strong, high confidence and conviction setups that I'm going to be looking at this week. That is how I'm approaching the market right now. I'm not trying to hit home runs. I'm just trying to steadily compound in this type of market and really get ready for that hotter market that I believe we're going to see as we head into midterms. Historically, midterms have been a really active time within the stock market because of, the political environment is so hot. So remember, guys, that's really my focus right now, taking things slow, small wins every day, and not pushing it too hard in a market that doesn't deserve that push and that doesn't deserve that amount of capital, right? So that's a big thing for me, guys. That's a really, really big thing right now, and I really want to emphasize that. So if you're new, thank you for joining the first Sunday Scan. I hope you guys have a fantastic rest of your Labor Day weekend. I will see you guys bright and early on the pre-market live stream tomorrow at 9:10 a.m. Eastern Standard Time, and then on live trading in the Discord until 11:30 a.m. We're going to be starting our new schedule. I'll release that a little bit later tonight. And also, if you're new, there will be a new welcome video coming out either today or tomorrow, which should really help you get integrated inside the Discord. So again, welcome. If you're a veteran Discord member, can't wait to get started in the month of September with you guys. I do think there's going to be some nice opportunities. It's all about your preparation and sticking to those A+ setups. I will see you guys bright and early on the pre-market live. Have a great rest of your Labor Day weekend and enjoy your Monday. Peace out, guys.